Hello everyone, welcome back to our channel. This video is going to be about CA Final, Self-Paced Online Modules, Set A, Corporate and Economic Laws. In Company Law, we are going to see about chapter number 8, Miscellaneous Provision. And everything we are going to cover in this chapter and whatever I am showing here, the notes, that will be available in our website. Now, I will show you how to download the notes from the website. It is very easy only. The link to the website will be there in the description, pinned comment, and the Telegram channel and WhatsApp community links will also be there. So you can join that for future updates of the upcoming videos that we will be posting. Now I will show you the website. Now here in the browser you can type Mission CA Virtuals and then you can see the first page which is opened and here you can click on it. Now here if you see, you will see this tab, CA Final SPOM Free Resources. When you go into that, you will be able to find all the SPOM resources. Set A, Set B, Set C, Set D, everything will be there. Instead of scrolling through Telegram channel, word messages and all, you can just come here and then find these resources. Just you have to log in into the website, then you can access the resources for free. So all the YouTube channel links, YouTube videos links, and then the resources PDF, everything will be uploaded here. Inside the Set A folder, it will be available. So you can easily come into this website, log in with your mobile number and then view the PDF resources. So now we can start the chapter. Now we can start chapter number 8, Miscellaneous Provisions. So first we can see what are all the topics that are there in this chapter. So first one we are having, that is the registered valuer. Second one, that is the striking off. Third one we are having the government company. Then fourth one, when you see, we are having the Nidhi company. Then at last we are having the fraud along with that dormant company. Now these are all the provisions we are having in this particular chapter. This is a relatively small chapter only, so we can complete it quickly. So first we can start with the registered valuer. So now who is a registered valuer? Registered valuer is a valuer who is having a certificate of registration with the authority. So when you take the registered valuer, we are having the provisions in the Companies Act. Along with the registered valuer rules we are having. These two we are having the provisions for the registered valuer. Now here, a registered valuer should have a certificate. Like we can write in short form, certificate of registration with the authority. Here, who is the authority? Insolvency and Bankruptcy Board of India. This is the authority for the registered valuer and this is the authority which will conduct the valuation examination. So this is the valuation examination which is conducted by IBA. You have to pass that, only after that you can become a valuer. Now, what are the steps to become a valuer? First, you can be a valuer either as an individual you can do it or as a valuation firm. Like as a firm or a company, you can incorporate and then you can do the valuation work. So, allow this, you can do it as an individual also or you can do it either as a firm or company. Now here, whenever you are doing it, you are jointly and severally liable. Like if you are an individual, you are liable for the valuation. If there is a wrong statement, misleading statement, you will be punished individually. If you are a firm, if you are forming a firm or company, the firm will also be liable. You as an individual, you will also be liable. So both the people will be liable when you are doing it as a firm or a company. Then here, what are all the steps to become a valuer? So first you should have some basic qualification. Like you should have a bachelor's degree or a postgraduate degree or a chartered accountant or a company secretary or a cost and management accountant, like that, some degree you should have and then some relevant years of experience you should have. That is called as the basic qualification. Then after that you have to attend the educational course. This educational course will be conducted by the registered valuer organization. So you can also form a registered valuer organization. That organization, what it will do? It will conduct the educational course, which will give the practical training for the valuers and then it will give them the practical training plus the education. For becoming a valuer, whatever it is the education that is required, apart from the basic qualification, everything will be given by the registered valuer organization. That is like the training institute. Now, after that you have to pass the valuation examination. This valuation examination will be conducted by IBBI or any other agency which is appointed by IBBI. So basic qualification plus the educational course plus the valuation examination, you can become a registered valuer. Now we can see the registered valuer provisions one by one. So here when you see in the Companies Act, we are having the rules and then the section 247. Section 247 is the section in the Companies Act. This is the rules for the registered valuer. Now, what are all the assets for that we can do the valuation? Property, stock, share. For all these assets we can do the valuation. Now, for one company, who will appoint the registered valuer? Either the audit committee will appoint. If the audit committee is not there, board of directors will appoint audit committee or board of directors if the audit committee is absent. Now, registered valuer should be a person who is having prescribed qualification, experience should be there. He should be registered as a valuer. This registration is nothing but the certificate of registration with the authority. Now, this is the provision given in section 247. Now, when you see the role of valuer, what is the role of valuer? He should do a true, fair, impartial valuation. Normally, everyone should do that only. Exercise due diligence. You should be careful in your evaluation assignment. You should do the valuation as per the rules prescribed. Then, you should not do the valuation in which you are having an interest. So, you are interested in the asset. Like, you are in a company and then in that company, that asset is the main asset. Like that, you should not have any interest in the asset. Because of the asset, you should not have any gain or loss. So that should not be there. Either when you're doing the valuation, 3 years after the valuation and then 3 years prior to the valuation, you should not have any interest in the asset. You should not have any relationship with the asset. Then contravention penalty they have given. If there is a penalty, like you are not following these conditions, you are not doing a impartial valuation, or you are not doing it as per the rules, or you are doing the valuation for the asset in which you are having interest. So in that case, you will be convicted. This penalty will be levied for you. And the thing, if you did it with the intention to defraud the company, you are having an intention, you are having a motive to defraud the company. So then what will happen? You will be additionally given imprisonment also. Then if you are convicted like above, then you have to refund the remuneration. Whatever the salary that you got for the particular assignment, you have to repay that back and pay for damages. Additionally, you have to pay damages also. So this is the entire provision of registered value in the Companies Act. Now we can start the rules. So definitions, no need to read it line by line. Now we can go to the main rules. So eligibility. So what is the eligibility? Basic eligibility that should be there, right? That is the eligibility. The eligibility will be who's a valuer member of the registered valuer organization. Here, when you want to attend a course of the registered valuer organization, you should become a member of the registered valuer organization also. Member of RVO, then only you can participate in and complete the educational course. So here when you see valuer member of a registered valuer organization, then he is recommended by the registered valuer organization, passed the valuation exam within 3 years. So here when you see one more point, here you have to pass the valuation exam and then within 3 years you have to apply for the certificate of registration. Within 3 years you have to apply for the certificate of registration. Now the eligibility which we are seeing, right, that is a basic eligibility. Like you should not be a minor, you should not be an unsound mind person, you should have the proper qualification experience, you should not be a bankrupt, you should be a person resident in India. So this is one more important point. Only person resident in India can become a registered valuer. Then not convicted, that and all we are having normally. Then not levied a penalty under this particular section of the Income Tax Act, everything is there. This is the basic eligibility. Now, when you see this point alone, this you can see it in a little bit detail. If you are convicted for 7 years or more, then it is a permanent ineligibility. You cannot become a registered valuer in this particular life. So, if you are convicted for any offence for 7 years or more, then you cannot become a registered valuer. But if you are convicted by a competent court, the duration of imprisonment is more than 6 months. Then, and the offence is moral turpitude. Moral turpitude offence, when in 6 months or more you are imprisoned. Then what will happen? You have to wait for a cooling period of 5 years. So 7 years or more means permanent ineligibility, but more than 6 months you are having the imprisonment in an offence of moral turpitude, then 5 years is the cooling period. After that only you can become the registered valuer. Then fit and proper person. That is based on the integrity, no convictions are there against you, competence, everything will be considered for the fit and proper person. So that's all about the registered valuer basic eligibility for an individual. Now the next thing when you see, you can also form a partnership firm or a company, then also you can do the registered valuer work. So if you are doing it like that, then what are all the conditions? The objective of the partnership entity or the company should be for the professional or financial services only. And if it is a company, it should not be a subsidiary, it should not be a joint venture, it should not be an associate, it should associate of another company or body corporate. It cannot be a subsidiary, joint venture, associate. Subsidiary, joint venture, associate not allowed. You should be an independent company. It should not be a subsidiary, it should not be a joint venture, it should not be an associate. Like some other people should not be influencing your company. Then, if it is undergoing insolvency resolution, not allowed. Then, all the partners or directors are not eligible. All the partners, all the directors, not even one person is eligible as per this rule. Rule 3. Then also you are not allowed. Then 3 or all the partners or directors, whichever is lower, are not registered valuer. So here what they are saying is that we can add one page itself here. 3 or all partners, whichever is lower, are not registered valuers. So what they're saying is that we can take two cases. For example, you are creating a partnership where there are two partners. If you want to convert this into a partnership firm and then you want to get the registered valuer certificate, then what should happen? Three partners or all partners, whichever is lower. So we are having only two partners. So 3 or 2, whichever is lower, 2 will be the answer. So 2 partners should be registered valuer. If all the 2 partners are not registered valuer, then you will not get the certificate. Now we can take one more example. We can take a partner number which is more than 3. So we can take 4 partners. 4 partners are there here. 3 or all partners, that is 4, whichever is lower. So here it will come to 3. 3 is the lower number. So minimum 3 partners should be registered valuer. One partner can be other also. One partner can be non-registered valuer. Minimum 3 individuals who are there in the partnership, they should be a registered valuer. Only then you can get the registered value certificate for the firm or company. So that is the rule they have given here. Then none of the partners or directors is a registered value for the asset class for which you seek to be a registered valuer. So here we are having various asset class like land and building we are having, goodwill we are having, and then what we can say here, all the asset class that has been mentioned here: property, stock, share, debenture, security. So property, stock, share, security, debenture, everything we can do the valuation. Now your firm or company, you are having a firm or company. Now you are having some 4 partners we can take. All the 4 partners are specializing in the land and building valuation. They are having the registered value certificate for the land and building valuation only. But you are going and getting the registration. You are asking the registration for what we can say property. Like we cannot take property, we can take another thing. Like you can take shares. So all the partners are there for land and building valuation only, but you are asking for the valuation certificate for shares. So in your firm there is no registered valuer who can do the share valuation. Everyone is qualified only for the land and building valuation. So you can ask the registration certificate only for the land and building. You cannot go for the shares. So that also they have given here. That is this point. Then it is not a member of the RVO. Your firm or company, it should also be a member of the registered valuer organization. Then, okay, this is one more point that you can read it by yourself. So that's all. Now here, one person was granted the registration as valuer, but when he got the registration, he did not tell that he had some criminal proceedings against him. When he was getting registered, there was some criminal cases pending against him, but he did not disclose it when he is getting the registration. So his registration will be violated, his registration will be cancelled because he violated the rule 3. Then qualification and experience. So the basic qualification I told you, right? Postgraduate degree or bachelor degree or membership of a professional institute set up by a act of parliament. So that is the provision here. First point, you should have the postgraduate degree from a specified discipline from a recognized university. Proper university should have the postgraduate degree with 3 years of experience. Like postgraduate degree plus 3 years of experience. That is the first point. Second one, when you see, you are having a bachelor degree, that is UG, undergraduate degree, and then it is a recognized university. From a recognized university, you are getting the degree, and you are having 5 years of experience. That is the second point. Third category, you are having a membership of a professional institute established by an act of parliament, like ICAI. Then you should have at least 3 years of experience. Like you are having professional degree membership of a professional institute, and then you are having 3 years of experience. Like it is not a professional degree, you have to take it as membership plus 3 years of experience. So here when you see the degree, you're doing the degree, right? The degree from the specified discipline. What is the specified discipline? If you want to become a registered valuer for land and building, on that particular land and building you should do the degree. Like it should be related to the land and building, something related to engineer, like that. If you want to do the valuation of shares, you have to do the degree in a financial background. So that is what they are saying here. So this is the basic qualification. Then when you see, we have to do the educational course, and then we have to do the valuation examination. The valuation examination will be conducted by the authority. So authority on its own it can conduct, or through a designated agency it will conduct the examination. For whom it will conduct the examination? For the individuals who are having the basic qualification and then completed the educational course, as I told you. Now, the educational course, for that we are having some 2 points that you can read it by yourself. Normal educational course you have to complete it from a registered valuer organization. After that you can attend the valuation exam. Before that you should have the basic qualification also. So that is the thing they are trying to tell here. Then the authority can tell that the examination conducted by a postgraduate degree. For example, you are doing a postgraduate degree from a university, and the authority IBBI, it It is saying that whatever the final exam that you attend in that university, that is enough. No need to pass the valuation exam separately. Then no need to do the valuation exam separately. This university final examination, that itself will be considered as the valuation examination equivalent, and you will be granted the certificate. Then the syllabus for the valuation examination will be determined by the authority. Everything will be given on the website. Whatever the marks that you got when you are writing the exam, after the results has been announced, so your marks will be published in the website. Then after you clear it, you will get the acknowledgement. You can attempt it for any number of times. There is no strict number like only 5 times you can write. Like that, there is nothing. You can write it for any number of times. Then after passing the valuation examination, you have to make an application for getting the certificate. If you are an individual in this form using this fees, you have to file the application. For a partnership entity or company, you have to file form in this particular format. Then this much fees you have to pay. Then if there is any problem in the application, like some mistake you did in filing the application, in that the authority will give you time to rectify the mistake, 21 days. Then if additional documents needed, for that also 21 days will be granted by the authority. You have to submit the additional documents. If authority wants, it can require the applicant. It can ask you to come in personally you have to come to the authority office, and then you have to appear. They will ask you some questions, and then only they will decide whether they can grant you the certificate or not. So they can ask you to appear in personally in the office. Then if the authority is satisfied that all the things are proper, then they will give you the certificate. That certificate will be in Form C of Annexure 2. Then it will be granted within 60 days from the receipt of the application. For the additional document time, the clarification time, that and all will not be counted in the 60 days. Within 60 days, you should get the what we can say certificate. But in that 60 days, this 21 days given by the authority for rectification or additional documents, that will not be covered. Other than that, 60 days is there. The time is there with the authority. Then, if the authority thinks that registration we should not give, then they should communicate the order along with the reasons within 45 days. That is also there. So, 60 days is the preliminary timeline. 45 days is the time for communicating the rejection. Then, the applicant can submit an explanation. They can submit additional things like, I want to get the registered valuer, that certificate. Like that, you can submit an explanation. That also you can give within 15 days. So 60 days preliminary timeline. If they are rejecting, they have to tell within 45 days. If they are rejecting, you got the rejection notice. After that, you are having 15 days time so that you can give an explanation. Then, okay, after that, the authority they can grant the registration after your explanation, or they can reject that also along with the reason. That and all there. This is the process for application for getting the certificate of registration. Now, condition of registration. You should always be eligible. You should always follow the act, rules, and then the internal regulation of the registered valuer organization. The authority, IBBI, it will also have some regulation that you should follow. Companies Act you should follow. All the other laws you should follow, along with the internal regulation of the registered valuer organization. That also you should follow. Then you should not conduct the valuation for the assets other than registered. So you have taken the registration for land and building. So you should do the valuation only for land and building. You should follow the code of conduct. You should maintain the records, the books of not books of accounts, the records. Whatever the assets you valued, that records should be maintained for at least 3 years. This they may ask it as a question. This point. Maintain records for at least 3 years. Then like this, the things they have given. This is normal things only. When you read itself, you can understand. Only the partner who is the registered valuer for example, you are doing the valuation for land and building. As a firm, you are doing. In that, the report will be signed by the partner who is having the license for land and building. No other partner can sign it. So like that, normal points only they have given. So that all when you read it, you will understand. I told you that they will be jointly and severally liable. Both partnership entity will be liable, and then the partner who signs the report, he will also be liable if there is any mistake in the valuation assignment and all. Here, when you do the wrong valuation and submit it, many people invest or not, they will invest in the company based on the valuation of the project or of the assets, valuation done by the valuer. So it is a very important work. If there is any wrongdoing that is found later, then they will ask you only, the valuer only. Why did you give the wrong report? Like that, they will ask you only. For that, you will be liable. Like other conditions also they have to follow, everything that is there. Then if you are having any changes in the personal details, or if you're a firm or a company, any change in the director, change in the partner, you have to inform it to the authority. Then you have to conduct the valuation as per the valuation standard notified by the government. Till now they have not notified, so you have to use the internationally accepted standards or valuation standards which is given by the registered valuer organization. For example, we are having various registered valuer organization, like ICAI has one registered valuer organization, ICMAI has one registered valuer organization, ICSI, they are also having one registered valuer organization. These registered valuer organization, you will be a member. For example, you are a member of ICAI RVO. They will give you the valuation standards that you have to follow. Then in the report, background information of the asset, who appointed you, and then what is the purpose of the valuation. Like for this project we are doing, everything should be there. What are all the other experts involved in the valuation? Just you or any other experts also worked together in this valuation. Then valuer interest or conflict. Whatever the interest you are having on the asset, whether you are related to the asset in any manner, that also you should state. Date of appointment, valuation date of report, inspection, nature and source of information, procedure adopted. Like audit, we have to deal all the things. Like date of audit report, everything should be there, right? In the same manner, procedure adopted, like audit procedure, here also valuation procedure. Restriction on the use of report, like in audit we will study special purpose framework. In that, for a particular purpose we will be doing the audit. So the audit report will be clearly mentioning that other than this purpose you should not use it for any other purpose. It is for internal purpose only. It should not be leaked outside, it should not be circulated outside. Everything will be clearly mentioned. Like that should be mentioned in the valuation report also, if it is done for a specific purpose. Conclusion, then what are all the factors you took into account, like key audit matter. Here also, what are all the key matter that you took into account when you're doing the valuation. So other limitation, caveat, everything you have to give it in the report. So these are all the content of the valuer report, valuation report. Then if a valuer wants, they can temporarily surrender the registration. They have to inform the RVO. So the valuer, if they want to temporarily surrender the valuation registration, they have to inform the RVO. RVO will inform the authority, that is IBBI. So that process also they have given here. Then whoever they surrendered it, those members, their details will be there in the website of the RVO. In the RVO website, they will give the details of the persons who surrendered their valuation license. So that's all we are going to complete it. So here when you see eligibility for an RVO, if you want to become a registered valuer organization, you are going to create an organization that will conduct the educational course and provide the training. That for that what you should do, you should have a Section 8 company. The main objective is to, the only objective is to regulate the valuers. It should be it can be a professional institute established by an act of parliament also. It can be a society also or a trust also. Then it is conducting the educational courses as per the syllabus determined by the authority, IBBI, either through classroom or distance education. Then it is granting membership to individuals who are having the proper qualification and experience. It is conducting the training for the members before giving the certificate. Code of conduct is there. Continuing education, like for CS we are having CPE, right? Continuing professional education. In the same manner for the registered valuer also, that should be there. Mechanism to address grievance, monitoring the quality of the service, the valuation assignment performed, whether it is performed in accordance with the valuation standards, the quality is maintained or not. That also should be periodically reviewed by the RVO. Then the RVO, they can convert into a company under Section 8 and include the bylaws. These are also normal requirement only. They have given for the RVO. If you want to become an RVO, this you have to follow. Then if you want to do a complaint against the registered valuer, you have to do or RVO. If you want to do the complaint against RV or RVO, you have to do it to IBBI along with such fees. This IBBI, it may refer the complaint to the RV or RVO asking the explanation. So that also then valuation standards will be notified by the government. Then the committee will be formed for the valuation. That committee is the valuation committee. So it will be set up by the government, and it will contain these people: one chairperson, well versed in finance, accountancy; one member from Ministry of Corporate Affairs; one member from IBBI; one member from Legislative Department; president of CA Institute, CS Institute, CMA Institute as ex officio members. Whoever is the president at that time, they will be the member. So that is there. Punishment for contravention, punishment for false statement. So everything is clear. That's all about the entire valuation. Have completed the registered valuer provision in the Companies Act as well as the rules. Now the same thing which I told you earlier, that is the basic thing. So this you have to follow Companies Act and then the registered valuer rules. In that everything will be given. Basic qualification should be there. Educational course, valuation exam. You can become a registered valuer. So that's all about the registered valuer. Now we can move to the next topic. Now we can start the topic of Nidhi company. So here also I will tell you a few things before you start. So here, what is a Nidhi company? Nidhi company, it is a company, it is also called as the mutual benefit society, where the main objective is to get deposit from the members, and then it will give the loans, that also to the members. So both the deposits and loans will be given only to the members. Members means shareholders. So this means that if you want to get a loan, you have to be a shareholder. So this is the first thing. Then when you see we are having a lot of regulations and requirements. Like since you are operating as a mutual benefit society or a Nidhi company, you have to have the word Nidhi Limited in your name. Then you have to follow the net owned funds. to deposits ratio, that should be 1:20. So what is the meaning of net owned funds? It is, you can understand it like the capital of the company. So capital of the company is to deposits, whatever the amount you are getting from the public. This is some kind of a liability. This is an outstanding liability only. Like when a bank is getting a deposit, it has to return it to the depositor. So the depositor will demand it back with interest. So it is a liability for the bank. Similarly, the deposit, it is a liability for the Nidhi company. So if you're having 1 rupees capital, you can have only 20 rupees outstanding liability. So this is the, what we can say, the ratio. That should not be, what we can say, it should not be violated. So minimum should be 1:20. So you can have more capital, but more than 20 rupees you cannot get the deposit. By having this net on fund to deposit ratio, this is the thing that is being regulated. And along that, we are having one more requirement. That requirement is for the unencumbered term deposit. So I will tell you this logic also. When we are having a bank, that bank, when it is getting 100 rupees deposit, it cannot lend the entire 100. That is not possible. It can lend only some 60 to 80 percentage. So it has to deposit the amount in cash reserve ratio and then statutory liquidity ratio, so that only remaining can be lent by the bank. So 100 rupees deposit, it cannot be lent 100% by the bank outside. So only 80% can be lent outside. Now here also we are having such a requirement. If the Nidhi company is getting a deposit of 100 rupees, it can give only some percentage as a loan outside. It should keep some percentage as unencumbered term deposit. It should keep 10 percentage as the unencumbered term deposit. Now, what is the use of this unencumbered term deposit? Immediately, when you are not having the cash, for unforeseen circumstances, suddenly you are getting some depositors, they are demanding the money back. Many depositors, they will not come and demand the money back. But in some cases, some people, they come and get the money back before the time also. They have deposited for 2 years or 3 years, but immediately, suddenly they are coming and then they are asking the money back. Even with a penalty, they are ready to pay. But they are telling that they want the money back. Now, in that time, if the Nidhi company does not have any money, any cash, then in that case, they can take this term deposit and then they can pay back to the depositors. If you want to break this particular fund for emergency purpose, you have to get the approval of the regional director. So that is also one more point we are having. And we are having the interest rate. What is the interest rate on the savings deposit, recurring deposit? What is the interest rate on the loan? And then what is the duration? What is the tenure of the loan that you are giving, tenure of the deposit, and then premature repayment of the deposit. Premature deposit repayment. For that also we are having the regulations. For all the things related to the Nidhi company, we are having the regulations in the Nidhi rules. So here also we are having the company section and in the Nidhi rules. We have to follow both of them. And here other things we are having, like what is the shareholder, and then what is the membership, who can be a member, that now we are having. So along with that we are having the incorporation. If you want to start a Nidhi company, what are the requirement? Minimum paid up share capital, how much should be there? Then whether they can issue the preference share or not. What are all the prohibited business? Prohibited business or activities for the Nidhi company. Like a Nidhi company cannot get a loan from a bank and then give it as a loan to the members. It cannot get a loan from a bank for giving loan to the members. So that is not possible. And it cannot issue a preference share. Like that we are having some restriction. So that also is there for the Nidhi company. Now we can start the Nidhi company topic. We can see the provisions one by one. This would have given you a basic idea of the Nidhi company. Now this incorporation matter, we can see it later. So this process we can see it later, but this I will tell you here. Incorporation, Nidhi company should be a public company only. Minimum paid up equity share capital 10 lakh rupees. Minimum paid up equity share capital should be of 10 lakh rupees. Then, so this you can read it by yourself. Then Nidhi shall not issue the preference share. That is one requirement. If you are having the preference share, you have to redeem it properly according to the terms of issue. Before the commencement of this act, before this rules, if you are having any preference share, that you have to redeem it properly. There is no problem in that. But after the commencement of this act, you should not give any more, what we can say, preference share. The objective should be cultivating the habit of thrift and savings amongst the members. The objective should be have to get deposit from the member, give loan to the member, improve the savings capacity of the members. You have to create the wealth for the members. So deposit lending only from them for their mutual benefit. They can have locker facility on rent. So they can also give the locker facility. But locker facility should not become the main business. Your main business is to give loans, get the deposit. Locker facility you can give, but it should not be of a very large scale. So for that they have kept a cap, 20% of gross income. This much is the maximum cap for the rental income that you are getting from the locker facility. If you go more than that, that is wrong. Within this limit, your rental income should be there, so that your locker business does not become your main business. So that is there. Nidhi Limited should be the name. The name should have the Nidhi Limited as a part of its name. Now this process we can see it at last. Here we are having something I will tell you at the last. Now, restriction or prohibition. What are all the prohibited business for the Nidhi company? Chit fund you cannot do, hire purchase finance you cannot do, leasing finance, insurance, acquisition of securities. You cannot buy the securities of the body corporate or company. Then you cannot issue preference share, you cannot issue debenture. In any form, you cannot issue any loan instrument. You cannot open a current account with the member. You cannot open a current account with its members. Current account is not allowed. Then this is for the mutual benefit and then savings capability of the members. It is not for any business, so current account is not allowed. Then it cannot purchase the securities of any company. It cannot control any other company through controlling the composition of the board of directors. So that is there. It cannot do any other business other than borrowing or lending. Then it can give the logger rent point also given here again. It cannot accept deposit or give loan to other than members. It cannot pledge the assets as security, whatever the assets given to the Nidhi company. So when the members they are getting the loan, they will give some assets to the Nidhi company. This Nidhi company cannot pledge those assets somewhere else. Nidhi company cannot get a loan by pledging these assets somewhere else. So that is not allowed. Then they cannot go into a partnership for doing the borrowing lending. They cannot do the advertisement for getting the deposit. They cannot do the advertisement publicly. That's why you cannot see the advertisement for the Nidhi company and all prominently. So if they want to give an advertisement, that it is not allowed. But they can give a private notice for their members alone. In that it should be printed that for private circulation to members only. In that notice what will be there? Their fixed deposit scheme, loan scheme, everything will be there in the notice. They cannot pay brokerage or incentive for mobilizing the deposit. For attracting the people to deposit into the Nidhi company, they cannot give any brokerage or incentive to external agencies. So they cannot get a loan from bank and give that amount as a loan to the members. That is not allowed. That I already told you. So this is the general prohibitions and restrictions for the Nidhi company. Then share capital and allotment. Nidhi shall issue the fully paid equity share of nominal value not less than 10 rupees each. The face value of the share which they are issuing minimum should be 10 rupees. So this will not apply to a company in subrule A and B. That is, these companies, specified companies, it is the Nidhi company under the Old Companies Act 1956. So for that companies, this share capital alone will not be applicable. Then service charge you cannot levy for the issue of shares. Minimum 10 equity shares should be there in the company to each deposit holder. So for each deposit holder, minimum 10 equity share, the Nidhi shall allot at equivalent to 100 rupees. So if you are a deposit holder, the minimum share that you should have is 10 equity share. The total should be 100 rupees. So this is the minimum shareholding for a deposit holder. Then the next thing is membership. A Nidhi shall not admit a body corporate or trust as a member. The member can be individuals only, not a body corporate or trust and all. Like body corporate and trust is not allowed. They can have a partnership firm, I think so. So only body corporate and trust is explicitly not allowed. And when you see the minimum number of members, minimum 200 members should be there in a Nidhi company. That membership should not fall below 200 at any time. Minor you cannot keep it as a member. Minor you cannot admit him as a member. But you can keep the guardian as a member and then keep the deposit in the name of the minor. So that and all you can do. Then if you are having the loan, you are getting a loan or deposit from the Nidhi. You are a deposit holder or a loan borrower from the Nidhi company. Both can be done by members only. You are a member, you have deposited or you have got the loan, you are having the shareholding, right? Only persons having the shareholding can do this. When you are having a loan or a deposit pending, you cannot transfer 50% of your shareholding. You can transfer the share, but 50% you cannot transfer. So here shall not transfer more than 50% when there is a deposit or loan by the member in the Nidhi company. And then the minimum shareholding that should be there at all times. Any equity share equivalent to 100 rupees. Then Nidhi company can accept the deposit. The one is to maintain net owned funds to deposit ratio that I told you. Then this is a transitional provision. No need to read now. Then deposits. They can get the fixed deposit and recurring deposit, and savings account also can be opened with the Nidhi company. Fixed deposit, when you see, the minimum period will be 6 months and maximum will be 60 months. FD, minimum 6 months, maximum 60 months. Then RD, recurring deposit, when you see, it will be for a minimum period of 12 months to maximum period of 60 months. Then in recurring period, in case of recurring deposit related to the mortgage loan. So here when you see you're getting a loan, for example, here the maximum time limit is 60 months for a recurring deposit. Here I will add one page. So the maximum time limit, it is 60 months. But we are having one more provision where you are getting the mortgage loan. Like you're pledging a house, you're mortgaging a house, and then you're getting the loan. For that, up to 7 years is allowed. 7 years, when you see 7 into 12, you will get 84 months. So when you're taking a mortgage loan from a Navy company, they will ask you to parallelly open a recurring deposit account also. Loan also you will have, and then parallelly you will have a recurring deposit account also. Why they are telling you to open this recurring deposit account? You have to pay the EMI of the loan also, and you have to pay the what we can say installment. You have to deposit the amount periodically in the recurring deposit amount account also. Deposit periodically. Suddenly, after the end of the loan, if there is a lump sum amount that should be paid at the end of the loan tenure, you can pay that amount from the recurring deposit account. Or if you're not able to pay, they will recover the amount in the recurring deposit account, the Nidhi company. So for that, as a backup plan, they are having this recurring deposit account. When you're getting a mortgage loan, they will ask you to open this recurring deposit account also for this purpose. Now when you see here the loan they are giving it for 7 years, we can take the loan is for 7 years. Now this recurring deposit account which is linked to this loan, that also you can keep it for 7 years. There is no problem. Normally, maximum time limit is 60 months only. But if the recurring deposit account is linked to the loan, then you can keep 7 years for the recurring deposit account also as the maximum tenure. So that is the point they have given here. So this point. Then maximum balance in a savings account shall not exceed 1 lakh rupees. So here we are having the maximum cap on the amount that can be there on the savings account that is qualifying for the interest. So in savings account, you can have maximum 1 lakh rupees. Only on that maximum 1 lakh rupees you will get the interest. You can have more than that, but on that interest should not be there. Then the maximum interest rate for that savings account will be maximum 2% above the nationalized bank savings account. In the nationalized bank, they will be having the savings account. In that, they will be having some rate of interest. Add 2% to that rate of interest. For example, if there is 7% in the savings account in the nationalized bank, you can add 2%, and then 9% is the maximum interest that can be paid by the Nidhi company on the savings account opened with it. Nationalized bank plus 2% is the maximum interest that can be paid on the deposit. So that is also there. Fixed deposit and recurring deposit. For that also there is a maximum cap on the interest rate. That is the interest rate prescribed by the RBI for NBFC. Along with that, so not exceeding the maximum rate for NBFC prescribed by RBI. So for NBFC, RBI will be prescribing the interest rate for the FD and then the RD. Maximum, this only you have to follow. This is the maximum rate that you can give as an interest on the FD or RD also. Same limit as like the NBFC. Now that is given. Here the next thing is premature deposit repayment. You have deposited for 3 years. For example, we can take you have deposited for 3 years, but in 3 months, within 3 months, within the date of deposit, you are going within 3 months and you are asking your deposit back. Whether they will give you the deposit or not. You are going after 1 year. Whether they will give you the deposit or not. You are going after 2 years. How much they will give and what is the interest that they will ask as a penalty. How much interest they will deduct. That also you have to see. That requirement they have given here. Within 3 months, they will not repay that. 3 months is a minimum lock-in period. You cannot withdraw the amount within the 3 months. Then, if you want to go after 3 months, then up to 6 months from the date of deposit, you will not get the interest. For example, 3 months you cannot withdraw. You left it. Now you are going at the end of the 4th month. Now, the date of deposit up to 6 months, you will not get the interest. You are withdrawing at the end of 4 months itself. They will give you the deposit, but you will not get any interest. Even 1 rupee interest you will not get. That is the regulation given here. The next thing when you see, before the expiry of the period, then what will happen? They will reduce the interest by 2%. They will deduct 2% on the particular deposit which they had given. Then death of a depositor. So that a person who deposited, he died. Now they can give it prematurely. If there is a joint holding with survivor clause, there will be joint holding, and if one person dies, to the survivor, the deposit will be distributed. So in that clause, we are having a deposit account. In that deposit, the person dies and then it is repaid prematurely. Here, whether they will give you the full interest. No. For example, if it was initially for 3 years, you did the deposit. Now, at the end of 2 years, the person died. Now to the survivor, this deposit will be distributed. Now how much interest will be given? That is the question. Originally, if you made the deposit for 2 years, how much interest would have been given? Like for 3 years, the interest rate is 10% we can keep. For 2 years deposit, the interest rate is 9%. Then they will give you the initial deposit amount. Along with that, they will give you 9% interest. As if originally you made the deposit for 2 years, they will give you that much interest. So that point also they have given here. The next thing, unencumbered term deposit. I told you that we have to keep the unencumbered term deposit 10% of the deposit outstanding on the close of business last working day of the second preceding month. So now I will tell you what is the unencumbered term deposit. Now I will explain you the provision of the unencumbered term deposit. So here, first, we can see what is the month in which we are having. So, for example, assume we are now in the July month. Now, we are in the July month, we have to take one preceding month. One preceding month when you take, it will be June. And then another preceding month when you take, it will be May. So, April, May, June, July. So, you have to take the, if you are in the July month, take the May month, second preceding month, first preceding month, second preceding month. You have to take the second preceding month. In that May month, last working day. On that date, how much deposits were outstanding? That amount you have to take. That amount multiplied by 10%, that should be the unencumbered term deposit to be maintained in July. Second preceding month, last working day, closing time, what is the deposit outstanding? Second preceding month, last working day, close of business time, what was the deposit outstanding? In that 10%. So, if you are having unforeseen commitment, you want to immediately withdraw some money so that you can repay back to the depositor, you have to make an application to the regional director in this form along with the fees so that you after that only you can withdraw from that account. From that term deposit. This term deposit you have to maintain it with a scheduled commercial bank and it should be unencumbered. What is the meaning of unencumbered? I hope you all know that. It means that you have to keep it without any charge. Like you should not pledge it. If it is pledged, then it is not unencumbered. If it is given as what we can say, some other security for getting any loan, then it is encumbered. So, if it is unencumbered, means it should not be pledged anywhere for getting loan. That should be separately independent. No one should have right over the amount except the particular Nidhi company. Then loans. Nidhi can give loans only to the members. Till now we saw instructions for the deposit. Now loans, when you see loan can be given only to the members. Then joint shareholder, this you can read by yourself. Then the limit for the loan. So we can see here amount and then the loan. So we are having the slab limit. Like what is the amount of the deposit? This amount is nothing but the total deposits that is there. This loan is nothing but the loan that can be given to a single member. The loan that can be given by a Nidhi to a member. So for a single member, this much only you can give the loan. How much? 2 lakh rupees. 2 lakh rupees loan you can give it to the member when the deposits, total deposits is less than 2 crore rupees. Total deposits is less than 2 crore rupees. Now 7 lakh 50,000 rupees. To a single member, they can give 7 lakh 50,000 rupees loan. When they can give it if the total amount of deposit is more than 2 crore but less than 20 crore. More than 2 crore but less than 20 crore. Then you can give 7 lakh 50,000 loan to a single member. Then 12 lakh rupees you can give the loan. When you can give 12 lakh rupees loan, total deposits is more than 20 crore, less than 50 crore. More than 20 crore, less than 50 crore. Then you can give 12 lakh rupees loan to a single member. 15 lakh rupees you can give where it is more than 50 crore. 15 lakh rupees loan you can give it to single member where the total deposits is more than 50 crore rupees. Here they have not given exactly if it is 2 crore what will happen. Less than 2 crore we are having the amount. More than 2 crore we are having the amount. Exactly 2 crore we are not having it. So that is not given in the provision. So this is the thing given in the study material. So this is the table that you have to remember. Up to 2 crore, 2 lakh. 2 crore to 20 crore, 7 lakh 50,000. 20 crore to 50 crore, 12 lakh. More than 50 crore, 15 lakh. So this is the total loan that can be given to a single member. If you are not making profits continuously in the 3 preceding financial year, you have to take the 3 preceding financial year. In that 3 preceding financial year, you have not even made the profit. In all the 3 years, you are having the loss only. Then you should not give any fresh loan. You should stop giving the loan and you should try to recover the remaining loans that you had already given. You should not give any new loan that they have given here. So the amount of deposit, here you have to see the amount of deposit rate. That should be based on the last audited financial statements, annual financial statements. Then they can give a loan against the security also. Like mortgage loan means against the property, land and building, they are giving the loan. So here, loan they can give it against gold, silver, jewelry they can do, immovable property, and insurance policy, fixed deposit receipt, national savings certificate, government securities. This also they can take it as security and give some loan. So when you take gold, silver, jewelry, the repayment period shall be not exceeding 1 year, up to 1 year. Maximum loan period will be maximum 1 year only. If it is an immovable property, not exceed 7 years. I told you that 7 years they can give a loan for immovable property earlier also. Then the maximum amount of loan you are giving that should be up to 50% of the value of the property. So the value of the property, for example, it's a land and building. If it is worth 100 crores, then you can give only 50%. Maximum 50 crore only you can give the loan based on that particular single land and building. Then it shall not exceed 50% of the overall loan outstanding. So here it means that, for example, we are having the total loans. Like for different time periods based on different security, we are having the total loan outstanding of 1000 crore. Total loans given. In that, only 50%, up to 500 crore only, you can give it as a loan based on the security of immovable property. So, immovable property, you can take it as a security and give loan, but only maximum 50% of the total loans outstanding. So that also they have given. You can get the loan based on this security also, but loan period will be maximum 1 year. Maximum 1 year is the loan period, and before that 1 year, if the instrument, what it can say, matures, if you get the maturity amount within 1 year, you are getting the maturity amount, then up to that date only the loan will be applicable. After that, the loan tenure will expire. So the loan can be for a duration of 1 year or the maturity date of the security, whichever is earlier. So that's all about here. Now, remaining, I have not explained it in detail. You can read it once. It is easily understandable only. Then, rate of interest. What is the rate of interest on the loan? When you are giving a loan, it shall not exceed 7.5% above the highest rate of interest offered on deposit. So, I will add one more page here. You are giving the deposit rate. In that, you will have a highest rate. Maximum, we are giving 7% return on the deposit. Add 7.5% to that. So, 14.5%. This is the maximum loan rate of interest that can be charged by the Nidhi company. So, here if you see, 7.5% above the highest rate on the deposit. Then the next thing, rules relating to director. This is from normal point of view, you can read it by yourself. Then director shall be a member of the Nidhi. For a director, you should be a member, only then you can become a director. The director shall hold office for a term of up to 10 consecutive years. Up to 10 years continuously, the person can be a director. There is no problem. But after completing the 10 years, we are having 2 years schooling period. 10 years continuously, you are being a director. Then after that, 2 years schooling period. After that, again, you can be a 10-year director. So, tenure is extended by the central government. Then that extended tenure will be applicable. You are having normally 10 years, but if the central government extended and gave you total 14 years, so after the 10-year end, you can serve another 4 years. There is no problem. Then the director should not be disqualified. As per the Companies Act, the disqualification we are having, the director should be properly qualified as per the Companies Act. It should not have been disqualified. The director should not have been disqualified. The person should not have been disqualified. Dividend maximum 25% you can give it in the financial year. Dividend maximum 25% only. Then auditor. So that's all you have completed. Just the auditor provision when you see, that is over. So auditor. No Nidhi company shall appoint an individual for more than one term of 5 years. So, one term, 5 years, you can keep an auditor. If you are keeping a firm, you all know that 2 terms of 5 years. We can keep it continuously. After that, we have to have a cooling period. Here, the cooling period is 2 years. So, they have given here. Then, half yearly return. A Nidhi company should file a half yearly return. Half yearly return, they have to file it within 30 days from the conclusion of the half year in this form. Auditor certificate. Every year they have to prepare the audit report and all, they have to do that. In that, they have to annex one more certificate. They will prepare the audit report. Financial statement will be there, audit report will be there. They have to prepare another document, which is the auditor certificate. What certificate? That the Nidhi company properly followed all the law provisions that is applicable for the Nidhi company, they properly followed it. Like that, you have to get a certificate from an auditor. Now, that certificate you are getting right. If there is any non-compliance, you did not follow certain rules, that also they should specify. What rules specifically you did not follow, that also it should be mentioned in the certificate. Then penalty for non-compliance they are having. So that's all about the Nidhi company. Only one thing it is remaining, that is the procedure for creating a Nidhi company. So here we are having two procedures. One is if it is incorporated before this 2022 rules. So 2000 we are having the rules, Nidhi rules we are having, 2014 rules also we are having, 2022 rules also we are having. So this is the latest rules. Now they have given the study material based on 2014 rules also. The procedure, the procedure for creating a Nidhi company they have given as per the 2014 rules. So if you are creating a Nidhi company after the 2022 rules, now if you are creating, you have to follow the new procedure. But the new procedure it is not there in the study material. Only the old procedure is there. So I will tell you just the gist of the old procedure and then we can complete the Nidhi company. So here, what is the procedure? Within a period of 1 year from the date of incorporation, first you have to create a normal company and then you have to take 1 year. Within that year, what you have to do, you have to fulfill the requirement. What requirement? 200 member net owned fund 10 lakh rupees. 200 member net owned fund 10 lakh rupees. You have to what we can say, fulfill this requirement. After that, you have to keep the requirement of net owned funds to deposit ratio 1:20, unencumbered term deposit 10% of the outstanding deposit. That requirement also have to fulfill within the 1 year. After that, what you have to do, from the end of the first financial year after the incorporation, you have to file the statutory compliance to the registrar within 90 days. Then if you are not able to fulfill the condition within 1 year, you are not able to bring 200 members, you are not able to get the rent on fund of 10 lakh rupees, or you are not able to follow the conditions, then you have to apply to the regional director and get a time extension. You have to do the application, and regional director will give the approval or the rejection, the extension within 30 days. The regional director can give extra 1 year time. Up to 1 year time, you can get extra from the regional director. Then after the second financial year, so first financial year you are having, and then you are within 90 days, you have to give the statutory compliance if you fulfilled it properly. If you did not fulfill it, you have to get the time extension. Extension they can give up to 1 year. So already 1 year completed, extension 1 year also if it gets completed, then after 2 years. Now, still if you are not able to fulfill the requirement, then you have to stop accepting the deposit, giving the loan, you have to stop your activity. So you have to stop accepting the further deposit with up till when you become eligible. So you have to stop accepting the deposit. You can again accept the deposit only when you become the eligible Nidhi company properly. So it will be, this provision will not be applicable if you are creating a Nidhi company after the commencement of Nidhi rules 2022. So that's why I kept this at last. So this is a very low priority section only, this low priority rule. So this is a old procedure. So I don't know why they have not given the new procedure in the book. Here, new procedure is very simplified. Just 120 days you have to wait. You have to fulfill the condition. That is there. But that is simple only. They have not included in the study material. So that's all about the Nidhi company. We have completed the provisions of the Nidhi company. Now we can see the topic of the dormant company. So what is a dormant company? Why we want a dormant company? So you are now you're starting a company, but immediately you will not have major business operation and all. Just you will have the company and the office will be there, but no business will happen. After some years only you will start the project, you will do the work, then only the business will happen. So if you are in such a case, then you can create a dormant company. Why you have to create the dormant company? If you are creating a company and not doing any business, then the registrar of companies, he will maintain a register of companies. In that, all the company name will be there. I hope you all know that. And if you are not doing any business, you are not carrying out any business, then the ROC will strike off your name from the register of companies. Then your company will not be active. Only if your name is there in the register of companies, it will be a proper company. Otherwise, you will not be a proper company. So what you have to do the business actively. Otherwise, if you are not doing the business actively, get the dormant company tag, get the dormant company label. After that, the register will not strike off. Up to 5 years, you are having the time. When you get the dormant company tag, you are having the 5 years. You can slowly start the business, there is no problem. Dormant company tag, you can keep it for 5 years. Now, this is the dormant company tag meaning, the dormant company label. Now, you are going to create a company for a future project or to hold an asset or for intellectual property holding, or there will not be any significant accounting transaction. It will be an inactive company. Then you can get this dormant company tag. What is an inactive company? It is not carrying on the business, no significant accounting transaction, not filed the financial statement or annual return for last 2 financial years, then it will be called as an inactive company. So, what is a significant accounting transaction? Any transaction other than payment of fees to registrar, payment to fulfill the law, allotment of share to fulfill the requirement of act, maintaining the office. These are all the basic things. Other than this, if you do any transaction, any sale, any purchase, any acquisition of property, disposal of asset, if you do anything like that, it is a significant accounting transaction. No such transaction is there. Only the bare minimum necessary transaction you are doing, that also to keep the company alive, to do the payment of fees, to do the allotment of share, to do the maintenance of the registered office. That only you are doing. You are not doing any other transaction. Then you are called as an inactive company. Now you have to make an application to the registrar. That application will be in form MSC1. So this chapter is called as the Miscellaneous Provision chapter. So here the form number will be MFC. You have to take MFC1. That is the application for getting the dormant company label. Now, for that you have to get the approval from the shareholders, right? You can get a special resolution. That is first route. Second route, when you see, you have to give a notice to all the shareholders, and you have to get the consent of 3/4 shareholder in value. Either special resolution or notice to all the shareholders and consent of 3/4 shareholders in value. If you get that, then you can give the application to get the dormant company label. You will be getting the label only if you are eligible. What is the eligibility? No inspection, inquiry, investigation pending against your company, no prosecution pending against your company, you are not defaulting in the deposit. Deposit we can get from the public, right, under the chapter of acceptance of deposit. So if you got any deposit, you did not make any default in the repayment, and all the deposits you repaid. There is no pending deposit outstanding. All the thing you repaid, and then you did not do any default. Then also you can get the dormant company tag. Then not having any outstanding loan. If there is any loan also, you have to get the consent of the lender. Generally, there should not be any loan. No loan should be there in the name of the company. But if you're having the loan, you have to get the consent of the lender. Consent of the lender to declare the company as a dormant company. Then there is no dispute in the management or ownership. There is no outstanding tax payable. You did not default in the workmen due. For the employees, you did not make any default in the payment. Then securities are not listed. A listed company cannot get the dormant company tag and all. It should be an unlisted company. Then registrar, after seeing whether you are eligible or not, he will give you the status of dormant company. The certificate of dormant company, it will be in the form MSC2. Then the registrar will have a register of dormant companies. In that he will enter the name of your company also. After that, if you so that is the thing for register. The next point, when you see, if you are a normal company but you did not file the financial statement or annual return for 2 financial years continuously, then registrar will issue a notice. He will give a notice to the company and he will enter the name in the dormant company automatically. For 2 years continuously, you did not file the financial statement, annual return. They will automatically enter your name in the dormant company after giving you a notice. If you are a dormant company, you have to file a dormant company return of a dormant company in form MSC3 along with applicable fees. The time period is within 30 days from the end of the financial year. Financial year end 31st March 26. Within that 30 days, you have to file the dormant company return, which is in MSC3. That is given here. Then if there is any allotment of security or change in the director, then also you have to file the return and inform this factor to the registrar. Then in a dormant company, normal director minimum number of director requirement will be same only. Minimum 3 directors in a public company, 2 directors in a private company, 1 director in a 1-person company should be there in the dormant company also. There is no problem. And rotation of auditors, that thing will not be applicable. That provision will not be applicable to a dormant company. Then if you want to become an active company again, you are a dormant company, you are having the certificate of dormant company, now you want to become an active company again. Now you have to file the form MSC4. Along with the proper fees, you have to do it. And for 5, you are having a dormant company tag. 5 years you are having the tag, you are properly doing the thing, everything you are doing, but you did not start any business. 5 years gone. Now they will automatically strike off the name of your company. That dormant company tag also you can keep it only for 5 years. If it crosses 5 years, they will automatically strike off the name of your company. So if company remains as a dormant company for a period of consecutive 5 years, continuously 5 years it is a dormant company, then they will strike off the name. We will see the topic of striking off also in this particular chapter itself. So now after becoming an active company, they will give you a new certificate, that is in form MSC 5. Then when you are getting the dormant company registration, you will be getting some conditions. They will be imposing some conditions also. If they want, they will give some conditions. If you are not following the conditions, then you have to give the application to the registrar and become an active company immediately. 7 days only you are having the time. The conditions you are not following as per the MSC1 application you submitted right initially for becoming a dormant company. In that, some condition will be there. If you are not following it, within 7 days you have to file the form to become an active company. Then dormant company, we will have a register of dormant companies, right? If you are not following the condition, they will strike off your name from this register. So that also they have given. That's all about the dormant company topic. Now we can see the topic of government company. So what is a government company? Everyone knows that. Just I'm giving you a gist of the provision that has been given in the study material. Just a very simple provision only. Quickly we can complete. So here if you see, in a company, 51% of the paid up share capital should be owned by the central government or state government, or partly by central government, partly by state government. So 51% of the paid up share capital should be owned by the central government alone or state government alone, or partly by central government and partly by the state government. This is first category. Second category, if you are a subsidiary of a government company, then also this subsidiary will be covered under the term of the government company, which includes a subsidiary company of a government company. This main government company is a government company as per this qualification. Then the subsidiary will also be considered as a government company. So here if you see, That is the definition given for the government company. And then the annual report. For a government company, you have to prepare the annual report. Now, if the government company is owned only by the central government, then the annual report will be laid in the parliament. If the government company is only owned by the state government, then it will be laid out in the state legislature. They will present the accounts and records annual report of the particular government company in the parliament, state legislature, and discussion will happen on that. Central government, state government, both are the owners of the company. Then it will be laid out both in the parliament along with the state legislature. Annual report will be prepared by the respective government. So that thing they have given here. So that's all about the thing of the government company. So here this example is important. We can see that also here. Central government and state government. Government of Maharashtra, it was the state government, central government. Both these people are holding 40% of the paid up share capital, and a government company is holding 20% of the paid up share capital in MN Limited. So when you see MN Limited, in that 20% held by a government company, 40% held by central government plus state government. Whether this company is a what we can say government company or not. MN Limited is a government company or not? That is the question. So what is the definition? 51% of the paid up share capital should be held by the central government, state government, or CG plus SG. So here central government and state government, they are holding only 40%. First category gone. Then when you see, it should be a subsidiary of a government company. So government company is holding only 20%. So it is not a subsidiary. You should have 50% or more than 50% to become a subsidiary. So it is not a subsidiary of a government company, and it is not having 51% paid up share capital controlled by the government. So it is not a government company. So when it will become a government company? Here instead of this, we are having 51%. Then it will become a government company. Or else here instead of 20%, you are having 60%. Then also we can call it as a government company because MN Limited becomes a subsidiary of a government company. So that example is given here. Now, PQ Limited is a subsidiary but not a wholly owned subsidiary of a government company. It is a subsidiary of a government company. So PQ Limited will become a government company. PQ Limited is a government company and MN Limited is not a government company. So that is the example they have given here. Now that's all about the entire provision for the government companies. Now we can see the topic of striking off of the companies. So here it is covering the section between 248 to 252. Now here these are all the reason for which the registrar will strike off the name of the company. What are all the reason? If the company failed to start the business within 1 year from the incorporation. From incorporation, 1 year you did not start the business, then there is a reason for the registrar to strike off your name. Then company is not carrying on any business for a period of 2 immediately preceding financial year. 2 immediately preceding financial year, no business. Or you are not doing a business and you did not get the dormant company label also. We saw what is the dormant company label. You did not do the business for the immediately preceding 2 financial year and you did not get the dormant company label also. Then also you are liable to be stricken off. Then subscribers not paid the subscription money and declaration not submitted to the registrar within 180 days of incorporation. So within 180 days of incorporation, we are having a provision that you have to entirely pay the subscription money, and then the company should file a declaration that all the subscription money has been paid properly by the subscribers to the memorandum of association. That declaration you did not file and you did not pay the entire subscription money properly, then also your company will be stricken off. Then company is not carrying on business. How the registrar knows this fact? The registrar did some physical verification, and in that case, in that physical verification, in that particular location, the company is not carrying on the business. The location registered with the registrar. Then also this will be covered under cause to strike off the name of the company. Now, when these reasons are established, the registrar will not directly strike it off. He will send a notice to the company and all the directors. If they did not reply, then only they will do the strike off. They are having the time to reply within 30 days. Then, if you want to do a striking off application by yourself you want to go and you want to strike off your name from the register of companies. Why you want to do that? Because striking off is an easy way to complete the company, to finish the company. It is an easy way. So you are voluntarily giving an application to strike off your company's name from the register of companies. For that, you have to get the approval of the shareholders. How you can get the approval? Special resolution or consent of 75% members of the paid up share capital. Special resolution or consent of 75% of members in terms of the paid up share capital. Paid up share capital into 75%. What is the amount that you are getting? Members holding this much paid up share capital worth of shares, if they are giving the consent, then also you can strike off the name of the company. And if you are a company regulated under a special act, Then you have to get the approval of the regulator also, like RBI, insurance company, electricity company. They have to get the approval of the particular regulator also, that you have to attach it along with the application. Then, if the company is giving an application, the registrar will make a public notice that this particular company, they have filed the application for striking off. That will be given as a public notice. Then, the subsection 2, that is, you can voluntarily file the striking off application. That it will not be applicable to the Section 8 companies. Then you will give a notice for the general public. The registrar will give a notice to the general public that this has happened. This particular company has come to strike off their name from the register of companies voluntarily. That it will be given in the official gazette also. It will be published in the official gazette for the notice of the general public. Then, after the expiry of time mentioned in the notice, they are giving the public notice, right? In that public notice, you will be giving a timeline. After that timeline completes, they will strike off the name. Then registrar will satisfy himself. Registrar will make sure that if someone later comes to get the liabilities repaid or some amount that is due to the company has given a loan to someone of, for example, we can take 1 lakh rupees. Now, this is the amount due to the company. Whether they have made proper arrangements so that they can recover this 1 lakh amount even after the strike off has happened. That they will see. That they have to ensure before doing the striking off. Then the liability of the director, member, manager, everything will be as it is, as if the company has not been dissolved. So I told you earlier in a chapter that dissolution means the final step of striking off the name of the company. So that is called as the dissolution. As if the company is normally operating, all the director, member, everyone will have the liability. So even if some issue arises in the later point of time, the director, everyone is liable. Then, even after the striking off has happened, the tribunal, if it wants, it can do the winding up process. It can start the winding up process. So that's all. Now the next thing, when you see, you are making an application, right, for striking off in a voluntary manner, that you cannot do in the following cases. Immediately in the previous 3 months, the date on which you are doing the application, previous 3 months we will see. In that 3 months, if you had changed your name, shifted your registered office, or you disposed of some property, uh, or you are doing the business normally, or any other activity you did other than necessary for application. This application you are giving, other than it, you did some other business activity, or you made an application to tribunal for compromise, arrangement, amalgamation. Under that chapter, you made an application, or you are already being winded up, you are already being bound up. Binding a process is already happening under this act or IBC. Then in that cases, they will not accept your application. If you do the application even in violation of these reasons, even if these reasons are there, still you are doing the application, then either the registrar will himself reject it or you can withdraw it by yourself. Then, after the company is striken off, what will happen? It will stop operating as a company, and then certificate of incorporation will be considered to be cancelled. It will be deemed to be cancelled. Then, if you are making the application, if you are filing the application with the intention of defrauding any person or with an intention to defraud the creditors, then what will happen? All the persons in charge and management of the company, they will be punishable for fraud. They will be liable. You are doing it for a malicious intention. You are doing it for a wrong intention. Then tribunal. If some person is aggrieved by the striking off order, so the company has been striken off, and then the name of the company is not there in the register of companies. Now, what will happen if some person has a problem? Any person is aggrieved. They think that the striking off of the company is not proper. Then they can make an appeal to the tribunal. The tribunal, if it is thinking that the striking off is not proper, tribunal also thinks that the company deserves to be alive. Then they will order the restoration. Before making this order, they will give a reasonable opportunity of being heard to the registrar, to the company persons concerned, before ordering the restoration. Before making any order, they will give the reasonable opportunity to these people. Then registrar itself thinks that by mistake or some other wrong information the company got striken off. Then registrar itself, he will make an application to the tribunal. Either the aggrieved person can make application to the tribunal and they will order the restoration, or the registrar also can do the application to the tribunal. In any way, a tribunal only can order the restoration. Then, when tribunal does an order, you have to file that order with the registrar. And after that, you will get a fresh certificate of incorporation if your name got restored. Then, any company, if the company, particular company which got striken off, or the member, or the creditor, or the workman, if he thinks that the company is proper only, the registrar made some mistake by striking off the company, then these people, company, member, creditor, workman, they can make an application to the tribunal. How much time they are having? 20 years. So they are having 20 years. Here above, when you see how much time they are having, 3 years. Normally, when you want to make as an aggrieved person, you are having 3 years. And then the registrar also, when you see, registrar also has 3 years only. Registrar has 3 years, and then the normal people have 3 years. But if you are a member, company, creditor, workman, you are having 20 years. Up to 20 years, you can file an application to the tribunal and then restore the company. So after that, the tribunal will give the order to restore the name of the company, and it will give such other order as may be as the tribunal may think fit. So such order will be given by the tribunal. So we saw the entire provision for the striking of companies, when it will happen, when the voluntary application can be filed, when you cannot file the voluntary application, then the registrar when they can restore the name, the aggrieved person when they can restore the name, or creditor, member, company, workman when they can do and restore the name, what is the time, everything we saw. That's all about the striking of provision. Now we have completed the miscellaneous chapter, chapter number 8 in company law. Everything we have covered in this chapter, but only one alone we did not cover. That I will tell you now. So here when you see section number 447, which is for fraud, that I did not cover. This is a simple section where you have to see the penalty. For fraud, if you are chargeable under section 447, what is the imprisonment or fine that you will get. So it is a very simple section only. When you read it, you will understand it easily. So I am not covering it. You can do this by yourself. So other than this, everything we have covered. You can subscribe to the YouTube channel if you like this video and share this to your friends so that others will also get benefited. And the website link is there in the description, pinned comment. You can go to the website and download the notes.